Hi all, hope you all are doing good. If you have seen my previous portfolio videos, I used to do at least one portfolio update per month. But I have not created a video for the month of August. This is because for the past couple of months I was not able to add funds to my Wealth Symbol account. And since there was no money coming into the account, I was not able to add much to my portfolio. That is the reason why I have not created any portfolio walkthrough videos recently. But since it's been a while, even though I have not added much and September is a good month for Dividend, I thought this is the right time for a new video. So let's have a look at the portfolio. My TFSA portfolio is worth $10,887, which from an overall perspective is up by $993 or at least 10%. However, I'm not a fan of this chart from Wealthsimple because when it displays the net gain, it also includes the cash that is sitting in your account. For example, I transferred $250 on Friday, and that is the reason why the one-day chart shows a gain of $60. Actually, the last one day was a negative in case of returns for me from my stock. So it's not all the gain from market, so I'm not giving that much importance to this chart. I separately track the amount that I invested because this is a TFSA account, so I have to be on top of how much money I invest per year. I also track dividends separately. Now let's have a look at the different stocks I own. I will not be going in detail for all the stocks, but for some I will share my thoughts. And yes, please note that I'm not a financial advisor, so don't consider this as an opinion from an advisor. The first stock is AQN. It is a renewable utility stock. Currently, it is showing a negative 3.8% returns for me. My average is $19.28 and I have 16 shares in my portfolio. So what I have seen is this renewable sector has a period of ups and then it falls and then again bounces back, and this cycle continues. If you look at the 2021 chart, around February they were at around an all-time high, then by March it dropped drastically, then bounced back and then dropped again, and so on. I have used these opportunities to buy more shares as I believe it is a good stock to own. The next one in my list is Bell Canada. I bought this during the beginning of my Wealthsimple account, and then this has been a great year for BCE. And if you see here, September was not a good month. The prices starts to fall. I may buy a couple more of this share. I only have 3 and this may be a good opportunity to add more. I will be monitoring them for the next couple of weeks. The next two are Canadian banks. The first one, Bank of Montreal. I bought this stock during March 2020, the time when the market crashed because of COVID. I bought this in my investor line account and later transferred it to here. And as you can see the returns, I was lucky to get this at a discounted price. The next bank is CIBC. I only have one share. I wanted to add more to it, but it is a high cost price stock. So, so it may take some time for me to build this stock in my portfolio and bring it to a 2-digit mark. The next one is CNQ. Another stock that I transferred from my investor line account to Wealthsimple. It is one of the earliest stock that I bought. I believe it's been with me for more than 3 to 4 years. I have a good returns and currently I do not have any plan to add more. The next one is CN Rail. So CN Rail chart, if you see, a lot to do with the KCS deal saga. Prices went down when it decided to bid for KCS, and later when STB rejected the proposal for merger, the stock peaked into its all-time highs. And as expected, it stayed at that level for only a short period, now back to the same range as of April, the pre-KCS saga. It's a good stock to own, slowly planning to add more. The next is Kanoi Income Fund, EIT.UN. I bought this stock with a different strategy. If you look at the dividend yield, it is a very high yield stock, almost around 10%. And if you compare the 5-year chart, the price has not changed much during this period. That is, it's between $11 to $12 in 2016 and almost the same now. So this is a stock that I would be happy if it stays for the same price for the next 5 years, but provides the same dividends. Enbridge, one of my favorite stock and the first stock that I owned. Going at a steady rate, returns are good, dividends are great, and if the returns fall below 4% mark, I will add more to it. The next two stocks are oil and gas stock, Imperial Oil and Keyera Corp. Keyera doing better in terms of returns, but I was able to buy some Imperial Oil stock during its dip. During these periods, it's a very good stock. The quarterly results exceeded expectation and has recently redesigned the strategy. I own 9 shares of Imperial Oil, same with Kera as well. I have 9 shares. The next one is Labrador Iron Ore. This is one stock that previously had given me amazing returns. From around $50 in July, it now is trading below $35. I have 10 shares with an average of $38.61. They have a huge yield, but the payout is not consistent. However, I'm not concerned with the drop in price. This is one stock that I will be monitoring for the next couple of weeks as well and mostly be adding more. The next is Manulife. This stock was up and down during the last couple of months. I have 45 shares at a price of $25. Based on the current price and my average price, this is another stock that I will be happy to add more into my portfolio. The next one is Pembina Pipeline. I have 13 shares at a price of $37.73. This is another good dividend yielding company and it is one of my favorite stocks as well. The next one is a new entry into my portfolio, QQC, which is an ETF that tracks Nasdaq index. I was looking for an ETF that tracks Nasdaq, and that's when I came across this ETF. This is a comparatively new ETF. Inception date is May 2021. Since it's a brand new ETF and the other Invesco ETFs has a good track record, I thought this would be the correct time for investing in this stock, which can give me an exposure to Nasdaq. Then I have two REIT stocks, very stable one even during the pandemic, Ryokan and Smart Centers, both around the same returns of 10 to 11%. I have 11 shares of Ryokan and 10 shares of SRU. The next is TransAlta Renewables, ticker symbol RNW. The second utility renewable stocks I own. Just like AQN, this one is also a bit down nowadays. And like AQN, this also is a good one to buy during dips. The next one is Sienna Senior Living. Now, this is the one in my portfolio that I am a bit concerned about. It has been going down for the last 3 months, and there are news about lawsuit against them, claiming alleged resident abuse and so on. So I'm not sure at this point as whether I should hold on to it. They have a good dividend yield, and currently if I sell these it would be a loss for me. So I will monitor for some time and see where it goes, and based on that I will take an action. The next one is XIU, a Canadian index tracking ETF. I only have 5 shares with a current return of 16.18%. This would be my main Canadian ETF and will be adding more in future. This month has provided me the highest dividend. This was expected because previously I had a good payout for the month of June. I'm not going to go through each dividend I earn, but will highlight the bigger ones as I scroll here for the month of September and August. Manulife has a very good dividend of $12.60, but the highest for me still is Enbridge at $35.91. In August, the highest was Bank of Montreal at $19.08. Now, here is the all-time dividend chart. As you know, most companies provide quarterly dividend. That's why this dip in July and August. So, ideally, September should be compared with June, August with May, and July with April. So, if you do that, there is always an increase. However, the difference between September and July and August and May is only between $3 to $4. And that is because recent months I have not invested much. So hopefully coming months of November and December will have a better increase in dividends. So that is my update for now. We'll see you all soon with another video. Till then, take care. Bye.